today with the debate over the future of Fannie Mae and Freddie Mac. 5 years after the financial crisis and $188 billion federal bailout, the mortgage finance giants are earning record profits and playing an even bigger role in the nation's housing market. They own or guarantee more than half of all outstanding mortgages in the U.S. In May, Fannie and Freddie sent $66 billion in profits to the U.S. Treasury, bringing the total paid to taxpayers to $132 billion and rising. But the improving picture at the government-sponsored enterprises, or GSEs, isn't stopping some in Congress from proposing to close Fannie and Freddie for good. Leading the charge, the chairman of the House Financial Services Committee, Jeb Hensarling. The Texas Republican proposes liquidating them, dramatically scaling back the government's role in housing. His new proposal would eliminate Fannie and Freddie within 5 years and replace them with a new securitization platform. It would strictly limit government mortgage guarantees and largely turn the mortgage finance system over to the private sector. It goes much further in cutting the government cord than a bipartisan proposal in the U.S. Senate. Does it go too far? I spoke to Chairman Hensarling on Capitol Hill.
Let's start with your plan to wind down Fannie Mae and Freddie Mac. Is it realistic to shut these institutions down within 5 years, basically get the government out of the housing finance business altogether?
Well, one, it doesn't get the government out of the housing business. What it does is, over a 5-year transition period, it does get the government out of having a permanent presence in the secondary mortgage market. The truth is, it hasn't worked out too well for us. I mean, today we have the federal government that is controlling virtually the entirety of our mortgage finance system. I don't think Americans want that to happen. Today, Americans have had to pay over $187 billion to bail out Fannie and Freddie, institutions where everyone knows they manipulated their financial statements in order for their top executives to earn huge bonuses. Today, the American taxpayer is on the hook for over $5 trillion. The American people want out of the bailout business.
Mr. Chairman, you know that there are a lot of entrenched interests out there. They look and see, first of all, Fannie and Freddie, yes, they got that huge bailout. They are starting to pay taxpayers back. They've returned a significant amount of money. They're helping someone in the deficit situation that people point to housing starting to recover. Why rock the boat right now?
Well, I mean, these are the same people who also told us there was never a problem with Fannie and Freddie, let's roll the dice. And so on the one hand, people said, well, you can't do anything 5 years ago because the housing market is too fragile, and now they say the housing market's coming back. Why do you want to rock the boat? We want to rock the boat because we need a sustainable housing policy. Number one, it has to be sustainable for homeowners. We've had federal policies that help put people into homes they couldn't afford to keep. I mean, it was tragic. All kinds of tragedy throughout our nation.
Do you think, sir, it's fair to say that your plan would reduce the number of Americans who can own their own home?
Quite the opposite. Under current law today, CoreLogic has said 52% of the Americans who bought homes in 2010 would not be allowed to finance under today's standards. Relative to current law, the PATH Act, protecting American taxpayers and homeowners, it's going to make home ownership more affordable, and it's going to give American home buyers options so that their federal government doesn't steer them into one product that may not be right for them.
You know there's a proposal over in the Senate, a bipartisan proposal from Mark Warner and Bob Corker, which keeps a bigger role for the government in the housing finance system. At times of catastrophe, of crisis, the government could step in with a guarantee. Why isn't that a more reasonable approach, and isn't that perhaps what the ultimate compromise is going to look like?
Well, we have a counter-cyclical provision in our bill as well. The FHA is not going away. And so in times of economic stress, you have the FHA that can ramp up should we have another crisis like we've had in 2008. But I am fearful, and I haven't looked closely at their bill. I don't know Senator Warner. I know Senator Corker. He's a good man. And I applaud anybody who will work and try to do something with his plan because the administration hasn't done anything. Dodd-Frank punted the ball. The administration has punted the ball. So I salute anybody who has a plan. But I am very skeptical of plans that, and again, I haven't read theirs closely. But if you don't get rid of the permanent, everyday government guarantee in the secondary mortgage market, I fear all you've done is put Fannie and Freddie in the Federal Witness Protection Program, give them a facelift, give them new names. Maybe they come out as Eddie and Annie and yet they're released on an unsuspecting public. And then once again, we're going to have a boom-bust cycle. We need a sustainable housing policy. Again, sustainable for homeowners, sustainable for taxpayers, so they're never called upon to engage in the biggest bailout, and sustainable for the economy.
How confident are you can get this not only out of committee, but that this will clear the House even at some point this year?
Well, I'm not a Las Vegas bookie, so I'm not going to give you odds, but I believe that we will mark this up. I believe we will pass it out of committee before the congressional August recess. And then I know that the majority leader is anxious to have this come to my floor. I'll appear before our conference, take my case to the colleagues, but I don't know anybody who wants to defend Fannie and Freddie. I don't know anybody who wants more taxpayer bailouts. I don't know anybody who wants to support government policies that are going to put people into homes they can't afford to keep. And so I'm anxious to take this. I'm anxious to get it out of committee. I'm anxious to take it to the House floor. And I believe ultimately that hopefully some version of the PATH Act will ultimately become law. I don't spend a lot of quality time with our president, but hopefully he would sign it.
This past week, Mr. Chairman, you also heard from Fed Chairman Ben Bernanke, perhaps the last time he may testify in front of the House Financial Services Committee. You've been a critic of some of his policies over the last few years. How is history going to treat Ben Bernanke in your view?
Well, I have a high regard for Chairman Bernanke. He's one of the most able public servants that I have ever met. I think in 2008, history will record that he stepped up to the plate, that at a very tough time in our economic history that the Fed took some creative moves. Not that I agree with them all, but clearly there was a role for the full faith and credit of the government in handling this financial crisis. My concern is that we are now in 2013, and many of the policies that date back to that crisis are still in place. And what we see, in my opinion, in the opinion of many economists, is something that is very, very low to moderate benefit and very, very high risk. I mean, regrettably, it appears that 1.5% to 2% GDP growth may be the new norm. And yet, and we've seen a tripling of the balance sheet that we all know that one day is going to have to be unwound. And so I've had the opportunity to sit down with the chairman, and I know his views, and he knows my views. We respect each other's views. It's also the 100th anniversary of the Federal Reserve later this year in the House Financial Services Committee. I'm sure you will be conducting a rigorous examination and oversight on how monetary policy has been conducted.
You don't have a vote in on any Bernanke successor. I'm not sure the president's going to be sitting down with you to get your take on it.
I feel pretty confident he won't.
Let me throw out two names for you to get your take. Janet Yellen, vice chairman right now, has been mentioned as a possible successor to Mr. Bernanke, and Larry Summers. Your thoughts on those two?
I think at the moment I'd rather talk about Texas A&M football, and I think the president could do a whole lot worse than Ben Bernanke, and maybe he will. But otherwise, I think I'll let the president make his own appointments at the moment.